Good morning, everyone. Our vlog for today is we will going to talk about tax evasion and tax avoidance. Before I will proceed, I will introduce first my members. Miss Brian Gineby Pananganan, Miss Camille Pipito, and truly yours, Susan Pacquiao. So, let's start. What is tax evasion? Tax evasion is an illegal practice of a person or corporation that intentionally avoids paying his true tax. It is also illegal and unethical. Tax evasion is illegal. It consists of the willful violation or circumvention of relevant tax laws to minimize tax liability. Tax evasion generally involves the deliberate underreporting or non-reporting of receipts, false claims, took deduction, or both. What is tax avoidance? Tax avoidance is a legal rearrangement of a business financial activities in order to lower the tax liability. It is also legal, ethical, or unethical. To understand more, tax avoidance is any legal method used by the taxpayer to minimize the amount of income tax owed. What is the difference between tax avoidance and tax evasion? Tax avoidance is an action taken to lessen tax liability and maximize after-tax income, while tax evasion is the failure to pay or a deliberate underpayment of taxes. Who are involved in tax evasion and tax avoidance? In tax evasion, it is unscrupulous government officials, while tax avoidance is the accountants, lawyers, and financial managers.
Tax evasion. So tax evasion, it is understatement of income, overstatement of expense, and false or fictitious entries in books. Tax evasion is the illegal non-payment or underpayment of taxes, usually by deliberately making a false declaration or no declaration to tax authorities, such as by declaring less income, profits, or gains than the amounts actually earned, or by overstating deductions, and it entails criminal or civil legal penalties. So, example of tax evasion, so paying for childcare under the table, ignoring overseas income, and lastly, not reporting income from an all-cash business or illegal activities. So, tax avoidance. Tax avoidance, it is a moving capital or labor to areas or countries with lower tax rates, and it is also manipulating the tax parameters through legal means. Tax avoidance is when an individual or company legally exploits the tax system to reduce tax liabilities. So, some examples of tax avoidance include putting your money into an individual savings account to avoid paying income tax on the interest earned by your cash savings, and investing money into a pension scheme, or claiming capital allowances on things used for business purposes. So, manipulating the tax parameters through legal means. So, why is it tax avoidance is legal? So, tax avoidance lowers your tax bill by structuring your transaction so that you reap the largest tax benefits. So, tax avoidance is completely legal and extremely wise. Taxable income, so we have net sales, business income, rent income, and interest income. Non-taxable income, so we have here the gifts and inheritances and life insurance proceeds.
How to compute the tax? First, put the taxable income or so-called income. Next is allowable tax deduction or expenses over income subject to tax or net income.
Why is the tax evasion ethically wrong? There are two: compromising the purpose of taxation, disobeying the government. Under the compromising the purpose of taxation, peace, security, just distribution of wealth. under the disobeying the government, disobeying laws, disobeying leaders.
Tax avoidance ethical. Million Pride Man admitted that tax avoidance is advantageous in the long run. Tax avoidance may therefore have been essential for economic well-being. Unethical tax avoidance. So, Rosario Manasan said that tax avoidance is similar to tax evasion. Loss of government revenue, increase in taxpayers after tax income, perverse effects on the equity and efficiency goals of the tax system. Tax avoidance. Avoiding tax is avoiding social obligation it is earned. Avoiding tax have costed the Philippines 360 billion per year.